Okay, so just sort of jumping straight into the markets here. I mean, what a place to start. Metals, 100%. I mean, gold absolutely just destroyed things to the top side coming into the end of last week and that. So as you sort of followed the videos through last week and that, sort of we saw certainly gold, like it had a couple of things. This is, I mean, obviously, first week through the sort of Middle East situation and that. But even sort of coming into last week as close, we saw this sort of strong bullish reaction from this lower level. So from a technical point, it was already going up. We had that gap on Monday morning, which at the moment just seems to be, you can't see it on this one, obviously, for some reason, Awanda doesn't seem to have it, but through here on the different one, you can see this gap, and it's just really just a runaway gap. Like it just didn't even attempt to come back. If you have a look, oil certainly had the same sort of thing, but it came back, closed that gap, broke up there, closed the week very strong, but I'm not really looking at oil so much. We're not trading oil so much at the moment. Um, on the gold trade, though, certainly it's just hammered through. The two early price targets we saw got taken out, and even this larger one here, which I really didn't think we were going to hit so early. As you sort of saw, I sort of drew it up sort of halfway through the week, and I was saying that look, up around this zone here, this is where I thought that we were going to see a bit of a reaction and a push back down. And for a split second, it actually came right up here. If we have a look on a lower time frame, for it all. This was the reaction right off that spot. So this is the top side of the channel. We had the 78%, and that's at 1919. That's coming in, within half a buck, a couple of cents, and the market agreed and said bang, push back down. We dropped off from there, profit wise, 13 buck drop. But then obviously it just charged up again and just hammered straight through. So that was it's gone beyond where I really sort of thought we were going to see the price target sort of, well, the price target got hit, but beyond where I thought the bears was actually to regain a bit of the control there. And obviously we just closed and no even selling even into the close of the week. So where to from here? Look, again, from a technical standpoint, the 1940s, call it 1950 just to be on the sort of top side safe, that's 100% retracement from that spike up that dropped down from, this is only two or so weeks ago. Was that 20th? Okay, maybe about a month or so ago, but certainly, you know what I mean. Not too distant, sort of like past. That's 100% retracement if we get back up around this level, and we can see that we know that the sellers are keen to hammer it down here. What's changed now, obviously, is the Middle East situation, and even more so, I think the reason that it hammered up so hard towards the end of the week was basically predicated on Israel's immediate response to what's going on in Gaza. Like, obviously, we had everything play out, but now we're sort of seeing that they've given this ultimatum for people to get out of the sort of Gaza or the north of the Gaza or go down to the south or whatever it may be, and that they're amassing a whole bunch of sort of land troops and that they're going to storm through. I think this is why people are still saying, okay, I mean, the situation hasn't changed. People are still looking for those safe haven options. And I think sort of if they think if this thing blows up over the weekend, well, again, you're going to see safe haven, more of a flight to safe havens, and gold's obviously the one of choice at the moment, or the metals are as a whole, but certainly gold. And this has got potential to really blow through this 1950s part. Like if this continues on, there's no reason that this can't go up and at least test that 2000. We know 1980 is the major breakout, which was sort of marked out a bunch of times. But if you look onto the weekly, the last amount of times that this has sort of come up through in an upward sort of move through 1900, it's always pushed over that 2000 area. So this is a very strong reaction here in this weekly candle. I mean, you got to remember, gold is like, I think I said it's $12.5 trillion market, and I think it was around 6% or so, 6.68% in a week, or week in a day, whatever you want to call it. Excuse me, from NFP lows. So that is a lot of capital flying into that market at the moment. So to move it that much in 1 week, I mean, you can see the size of these candles. So I think really sort of depending on sort of what actually happens in the immediate with this Israel thing, if it doesn't kick off immediately over the weekend, I'd expect a little bit of a profit taking come Monday morning. I would expect probably chances for people to get a little bit long if they still want to sort of get on this, because although sort of like you got the extenuating circumstances on the fundamental level which has pushed it past these levels, um, you've got to still respect the fact that this is a resistance, a falling resistance. It is a channel. It has been pretty much shored itself up enough times. We're closing outside this now. Like, as I've seen with a couple of the other instruments, just because you close outside the channel doesn't mean you're going to hold. But it definitely skews it more in that direction because we're doing what it hasn't been able to do. And the fact that we moved it with such great volume this week means that there's a general consensus around the market this is going to go higher. So I would be sort of wary about sort of maybe necessarily buying it straight off the bat. I'd probably be looking at drawing a fib up over this and sort of trying to pick some nice levels that we could start to get long again. So I don't have any gold exposure left at the moment. Everything was closed out over the weekend, or was it, sorry, on the Friday. But at the moment we can get rid of these ones because that's obviously hasn't sort of played out. But certainly if we're looking to get long on this, we could be looking, I reckon this, like, it depends, again, from a fundamental sort of point of view, if it doesn't kick off over the weekend and we do see some profit taking and we see an attempt to maybe come back down and, you know, continue this channel with this just being a bit of an overshoot, I'd still look to try and get long on this, and I reckon this 1880s, if we can get down under 1900, I mean, look, with 1932, so a $30 drop off is quite substantial. But if we could get it something down around these sort of 1890s, I'd certainly be looking to buy these things again to sort of try and sort of get the drive up. But really got to sort of see how it plays out on Monday for myself at the moment. But certainly gold has really sort of kicked back into the long side of things in the short term, at least. So we'll flip across to DXY. So DXY got that little kick up that we sort of thought was coming. I actually thought if we jump down on a lower time frame, this sort of hard, sharp spike up, this was off the CPI. We could see it had a gap and it tried to sort of bring it back down and left that gap actually open for quite a few hours, just on a 4-hour candle. But you can see that although they've tried to drive it down a couple of times, you know, they've still managed to sort of close it on a fairly positive-ish note for sort of dollar bulls. You could sort of be looking at this sort of falling resistance here, which we've seen a couple of times push through, and this could be actually a back test at the top side of that to then sort of push on and go up over here. I still think this is showing sort of signs of slow cracks. I don't think we're at a point now where we're just going to power on and see a larger topside move. At the same time, I'm not sort of saying that you know, it's going to be sold off. I think we're starting to define some very sort of keen areas where we're going to go, okay, we need to break here. We need to break and close underneath this. If we do look at this one here, it was brought to my attention by somebody else the other day that you know, they were looking for a bit of a head and shoulders pattern, which, I mean, when you look at it like this, it does look like it's sort of very much sort of coming up. This came up a little bit fast and hard for me, so that's why I thought we'd see, and as you can see, we did start to see them try to bring it back down here. But, you know, if we look at this and we go, if this were to be the case, and again, you know, the fundamentals are really what's going to be driving this sort of stuff at the moment. But if we sort of this, and obviously this is quite a considerable drift down to get to this one here. But if this is your sort of head and shoulders, and we look over here, we can clean this up a little bit now. These ones have done their job. Okay, so if we look for this at a measured move, if this were to be a head and shoulders pattern play out, this 105.60, 105.50 and change is our neckline that we want to get underneath. You're looking at a considerable drop off underneath this. So if we sort of drag this measure move down here, we're starting to look at, you know, I mean, it sort of line up at the sort of 104 area where we can see we've got a bit of a horizontal support previously as well. There's certainly a couple of levels that you've got to work to get through that on the downside. So, you know what I mean? It's not like, okay, we're going to get this meltdown to go down here. This is predicated on the idea that if we do get the head and shoulders play out, this being the neckline, we get the close down under here, that's when we sort of activate these sort of ideas and say that these are the price targets that we'd be looking at. This is the zone down here. And then, you know, if you're trying to get sort of short on dollar with these sort of instances, then, you know, these are the kind of areas where you're looking to book your profit book your profit along the way, but you start to really sort of wind down your dollar short positions if that were the case that you were playing it to the short side there. So, it's a little way to go. It did sort of close, like we were sort of expecting this push up here. So this is the moment that really is going to be the make or break in the short term. Because till we can actually put in a solid lower low down here, we can't confirm that this is actually coming back. And as it is right now, I mean, really it's sideways. It's just in a little zone. So where this push here decides to sort of slow down and peter out, will really tell us what's going to be happening in the medium term. So it's a bit early to sort of say, okay, yes, it's done. It's a bit early to say, no, look, we're going to be going up a little bit higher. But if this continues on and pushes, you've got the idea that you're either going to be retesting these highs, which then could be giving a double top, which again, you'd start to sort of look at this kind of area. So this is the range that we're really looking to trade. Till it breaks this box, we're not really going to be sort of seeing any sort of full commitment with any sort of direction. So I'll just clean all this up a little bit. So yes, this is above sort of 107.30, below 105.60. They're the sort of levels. Till we get that, we're not going to really have a direction of where to go next. And pretty much if you get the range break out the top side, you're almost looking for a measured move the same there. And that's taking up to around 109. So it'd be interesting. I don't think we're about to see a new high. I mean, obviously, sort of, if the war persists and all the stuff goes on, people have been buying the dollar for months on end. There's no reason why we're necessarily at a top, particularly the change in the fundamental landscape. But, I still tend to sort of think that we're going to have a little bit more of a cool off. So I'm still going to be trying to sort of position myself for dollar shorts where I can and sort of sell into these rips. But I'm going to have to play it pretty tight with the stops, because if we do come out the top side here, I think we've got a pretty clear cut price target of where we're going to be moving to the top side there. Certainly, alerts on either side of these to sort of really sort of tell us what direction we're going to be seeing in the short term, or medium term, probably more likely. Cool. All right, Aussie definitely on the back foot. This is not sort of showing any sort of signs of. Actually, we'll jump onto the other Aussie chart. This is not showing any signs of the market wanting to take on risk. It was a weird sort of start to the week, actually, with the Aussie, because, again, it's a risk asset. So, as war's breaking out, you'd expect Aussie to be sold off. But it did, I mean, on the very open, like it had that little gap down, and then you can see the second push down here. This was last week's open. But it really bucked the trend and just pushed straight back up and pumped up into this little head and shoulders pattern. Obviously, sort of CPI was the driving force to sort of really bring it back down, and even sort of there, I mean, of this drop down here, I had a quick look. I think it was like it only managed to sort of muster up to the 23%, and then obviously it's broken through that zone, closed down on the lows. But the thing that I'm looking at is really on the weekly. Like, I think this is what's sort of showing that we're definitely going to be probably going a little bit lower. The fact that it's been realistically in this consolidation for the last sort of better part of 2 months or so. And this week it was looking good early. It's just turned around and really just sort of, I mean, this wick has just sort of hammered it right down and closing on the lows underneath the horizontal support here. It did sort of manage to just hold last week's lows, where we've seen these 2 weeks previously. But again, sort of what happens with the sort of Israel situation or Middle East situation at the moment, I think is going to be what determines Aussie at the moment. But I think realistically, we could be looking around the sort of low 62s before we start to see a little bit more of a push up. And I know a big segment of the market would want to get long around these areas because, I mean, realistically, we've had pretty much a sort of straight, 600-700 point move to the downside over the last sort of 3 months. So there's definitely some options in that sort of coming from these lower levels. But in the short term, I wouldn't be surprised if we happen to sort of hammer back down a little bit further. So yeah, Aussie longs are probably sort of hurting pretty bad at the moment, obviously. But to negate this sort of move, we want to hold this zone of sort of 62.80. Again, it's a sort of polar opposite. I think another thing, the reason that it couldn't sort of rally up sort of coming into the end of the week was mainly the fact that as I said, you've got this idea that everything's going to kick off over the weekends. You're going to see this next push. And if that's going to happen, well, I think the market's spoken and they said, look, they're going to sort of try and drive this down even further. So yeah, we'll sort of have to sort of see how this plays out. I'm not really too much of a fan of this little box area down here, but above 63.40, I think we could say we're having a little bit of a recovery rally, and then we could sort of start to look up around these levels. But even if we drag this one down here now, yeah, I think it's got a lot of work to do to recover. I think these upper levels over here are really sort of, a bit of a long shot and not going to be coming anytime too soon. Flip across to over to China. Again, this is just grinding. I mean, yes, it's had this reaction from this buy zone and this high level sort of support area that we knew it was going to do, and it's just really just mainly sideways. There's not too much to report on China because we're still looking for this break of the downside here. Until that comes, we're not going to see any of these price sort of lower targets. Again, you've got this higher levels here where we know that the PBOC came in and intervened. So I think sort of people are cautious to sort of buy this up to much higher. And this is another thing. I know US sort of the one isn't part of the DXY, but it's that overall sort of sense of, if DXY is going to, and a broader sense of US dollar is going to be sold off, do you want to be buying the one up around these levels? Probably not. So again, this is why the market's sort of cautiously sort of just drifting it up and down sideways in this grind, just till we sort of get a bit more of a clearer picture of what's going to be happening over the next couple of weeks with the US dollar. And if we have a look at finally at copper, copper's teasing a large time frame breakdown. So we've got this sort of break of this triangle that we've sort of been looking at for this has been basically setting up for the better part of a year or 2 years or so. If we're going back, so March 22, so not 2 years, but year and a half, which we got the break. It tried to recover here. It's not really sort of showing a full commitment because, as I said, till we get this lower low after this break, it still has the possibility to just keep ranging through the side over here. But I think certainly once we get a close and also a close and a breakdown underneath here, 340 is the sort of price target that we could realistically, you can just see even previously when it shot back up through this zone, there wasn't anything in its way. There was no sideways churn. There was no sort of like back and forth with it all. It's like the market's just going to be saying, okay, yep, we're done with it at this level. So a close and a breakdown under here, I would expect a fairly fast move to 340 before we start to sort of see a little bit of support again and then pushing up. And obviously all these sort of things, I mean, this is very much tied in with Aussie. So if this can recover, you'll probably see Aussie and risk in that recover a little bit more as well. But at the moment, it's very much looking like the downside play for it there. So I think the main sort of takeaway at the moment is really just sort of seeing what sort of happens over the next sort of 24, 48 hours. It's looking like they're going to sort of charge in by foot into Gaza. I think the markets aren't going to sort of respond well to that. If that does happen and things go south, and particularly, if all these other things come to fruition and America gets involved and it spreads and escalates further, I would say precious metals have a lot more upside. I would say certainly DXY would at least maintain or grind sideways for a little bit more. Aussie dollar and copper, I would expect to sort of take hits to the downside. Anyway, that's about it from me for now.